Okay, it's 6 o'clock. I guess the majority of the guys are still or taking the day off here in the States. So anyway, we will get started. As you know, today is one of the weird holidays in the United States. It's called Columbus Day.
Strategy alert.
And the Columbus Day is a holiday where the exchanges are open. The New York Stock Exchange, the CME. So the exchanges are open. But all the major banks and hedge funds and whatever, all of these guys have the day off. So the market participants or the number of traders that are in the market during a day like today is very small relative to a normal day. Yet at the same time, because the number of traders are small who are making market, one would see that there is a lot of serious moves that takes place in a day like today, and therefore it's actually uh, a high risk trading day, if you will, and one should be stepping away from it because the volatility that happens is crazy. Just to give you an example, if you look at simply crude oil, I mean, there is nothing but just an idea so that you can get the effect of the market. This is today's, and it is up $1.50 just for today, even though there is no particular reason for that. But and at the same time, if you see that, you would expect under a normal trading day, because we have correlations and we have things that are not correlated. So one of the things that is correlated with crude oil is the Canadian dollar and the US dollar. So if you look at the US dollar today, as you see, the dollar is flying. I mean, it's really moving higher. So that is rather conflicting or pushing things out of whack. At the same time, you would look at the Canadian, which is directly related to crude oil. It is partially moving up, but at least now it has become a buy because it's above the 75.87 structural point. You would see the pound pretty much doing nothing. I mean, still doing nothing. It is recuperating from the capitulation that happened on Friday. And just to show you, I mean, if you look, for example, I have a sugar position. If you look at the sugar position, just I mean, it is in a genuine bull market, as you can see, and for no reason today just came down 2 points, which doesn't make any sense. If you look at cocoa, I'm just giving you just a general idea of what kind of market it is. Look at cocoa. Look at the capitulation in cocoa today. Again, it is an illiquid market. Some guy puts a big order to sell. Nobody is buying on the other side of the trade. Nobody's doing the other side of the trade. So the market starts selling and coming lower, and then it begins to trigger the sell stop markets, which orders which are placed by the traders who are long, and then you get this explosive move. I mean, this move here is about $160 per ton. I mean, this is a humongous move in one day. With that said, We'll just take a look on what is the news events in the market this week so we can plan ourselves for it. So the first important news number, as you can see on the screen, is that Russia and Putin said they are willing to join. The agreement with OPEC in order to limit the production. Of course, we all know that this is just, they haven't agreed on anything, it's just an intent. And it is, much of it is hyperbole, assuming that Russia is actually going to reach an agreement with the Saudis and the Iranian. The Saudis and the Iranian are two let's call it enemies, religious and economic, and each is seeking out the pretty much the destruction of the other. And at the same time, nothing is really going to happen because Iran, it used to produce during its heyday, in the good days before the sanctions, about 3.5 approximately million barrels a day. Now it is close to 3. So the capacity, the available capacity left for Iran to produce is about 500,000 barrels a day, which is not really going to affect the prices much. And they want to go back to the full value. With that, that is the primary situation that would indicate that at least crude oil is going to stabilize. And with the stabilization of crude oil, it gives us the opportunity to seek or to find several trades with regards to the currencies that are affected by crude oil. And they are the Canadian, which is one. And as you can see here, by looking at the index of the CAD, it's actually, we have a structure point, which is the 75.87, which is a very good structure point, as you can see. I mean, we do have a decent trend. So if it stays here tonight at the close of today at 5 o'clock US time, that would be a buy, and particularly if it goes above the 76.10, that would double the confirmation for a buy signal in the Canadian dollar. So we will be looking, for example, on buying the CAD, and we should pair that CAD with the weak currencies. So we should pair it with the British pound, so we can go short the pound CAD. We can also pair the Canadian with the euro, so we can go short also the euro CAD. If you look at the Mexican dollar, which is also another crude currency, if you look at this chart, the Mexican has been one of the best trading currencies that we have encountered this year, and I have mentioned it to you several times. And it respects the structural points, it respects the failures. It's actually a very good, smooth moving currency, and it is an important currency. It's a very liquid currency, and it's used primarily by all the South American countries. They use the Mexican peso pretty much as their reserve currency or their currency to buy and sell their goods and services. So it's very important currency. And as you see, as soon as the agreement happened, it gapped down. This is I would say, a pretty significant move. It is not time now to take the US dollar short, but as long as we are below the 19.084, we want to be taking the dollar next short. So in this evening, because today's movement is crazy. It's actually very dangerous to plan our trades now. I'm giving you the general perspective of the thesis behind the planning session, but for it to be beneficial to you and to me, I will finish this probably around 4 o'clock my time. That is close to the end of the trading day, Monday, and that will allow us to have a clear entry point and a clear stops. But right now, we have exaggerated move which can reverse on a dime. So theoretically, the
strategy alert.
The plan would be for us to go short the dollar max. I will be looking maybe around the 19.00 somewhere to take it short. I mean, if you look at this high here, this is 1899, so as soon as it gets there, it touches it and fails. Like, I mean, if it does something like this bar here, you see this bar? It just went above it and failed. This is where we'll take it short. So that's what I'm looking for in the dollar mix. We can also take the dollar CAD on the short side. As you can see, we came below the structure point, which is the 1.387. So again, it's a good trade, but not now. I mean, I don't recommend anybody to take any trades today. I did not take one single trade. And if I just want to show you how crazy the market is. Look at this here. See the position here? It closed at negative 1250. But the move, it went down to 2 grand. I mean, the position went negative $2,000. That, and then it comes back 50% approximately from the low. This tells you how exaggerated the move is and whether people want to actually take that position or take that move overnight. I'm a long-term trader. I take my positions and I stay with them for a while. So I had to weather the storm, but I'm showing you so that you can appreciate that a day like day, it would be nice if you take off and don't do anything. And if you have an open position, either it will go your way or you have to take some pain. So in this case, I'm taking some pain. So the dollar CAD, again, we want to take it short tomorrow as long as it's below 1.387. If you look at, for example, the pound CAD, the pound, as we agreed, I mean, it's in pretty dire situation, and any rally, any push up in the dollar is a good opportunity for the ones of you that don't have the pound yet to take it. So you're looking for maybe to the high of the day here, somewhere around 1.6448. I mean, somewhere around here to take it short. Tomorrow, definitely, there should be capitulation to the downside. So that is a high probability trade, the pound CAD, to take it short. If you look at the Uh, the pound Aussie, I mean, is actually good. I mean, I'll show you the Aussie uh, index. What's good about the Aussie index today, it is holding its own. It did not sell off. It's holding its own. As you can see here, this light blue, it tested the structure point, which is the 7570, which is a very important structure point. You can see it on your radar screen I sent you last week. It's extremely significant, and by holding above that, this means that this market wants to continue higher. And so that is one thing we want to take. So you can take the Aussie dollar long, you can go short a pound Aussie, you can go short even the Euro Aussie. Look at the Euro Aussie. And it's actually capitulating right now. But still, we want to wait because these moves, you don't want to sell lows. You want to sell a correction. So any counter, any move up, and when you see it stalls and doesn't continue higher, then you take it short. But one of the best trades that I have, and I'm still holding it, is the Euro Pound. Look at this. I mean, we have been discussing this, we have been pointing it. I mean, the breakout was 86. You're looking at four big figures. Now it's holding. The next one is 90.04. This is definitely one of the good long-term trades to hold now. Okay, so we're looking at being long the Canadian, we'll be looking being long the Mexican peso. It would be very interesting. I mean, I don't have it on this platform, but let me see. If you have on your platform, I don't have it. But if you have on your platform the Pound Max, that would be a doozy. If you have the Pound Max on your platform, this would really be a good trade because the pound is weak. Let's see if we can. Look at the Pound Max. I mean, this, as you can see here, I mean, this low right there, which is 23.187. 23.187. We're really coming back. This is a major structural point. On a break for this one, you can keep an eye on it and you put a line at 23 spot, as I said, 187 or 23.20. That would be a good trade because it should take you maybe to 21. This is a humongous move. I mean, the distance of the move, I mean, if you have from here, from 23, let's say, to 26, that's 3,000 pips. It should give you an equal move below that structure point. So if it was above the structure point, with 3,000 pips, it should come down below the structure point another 3,000 pips. So that is actually a very high probability trade. So you have the pound max, you have short, you have the pound CAD short, you have the euro pound long, you have the pound Aussie, if you like.
Strategy alert.
The next one we are going to look at is
Strategy alert.
the yen pairs are rather interesting. There has been a lot of talk coming out of the DOJ. And as you can see here, that the Bank of Japan, the talk, they really want to push the yen lower. If you look at the radar screen I sent to you last week, and I'm going to show it to you now again. As you can see, I mean, this is still with last week numbers because I didn't do it today because the market is going crazy. But if you look at this, you're buying on the pound yen, on the dollar yen was 101.50. It is now 103.75. So on this, the dollar yen, you could have made 200 pips on that trade. If you look at the Aussie yen, that is about 100 pips. The CAD yen, another 100 pips. Even the Swiss yen, not really much, nor the Euro yen is about 150 pips. So the yen is coming down and they are beginning to feel that the upward move is having a negative effect on the economy, and we may expect some movements in the end. So we will continue being long our yen pairs, and which means being short the yen, as long as the yen remains below this structure point. As you can see here, the structure point, which is the 97.14. So we're about 50 pips. So the yen now is, we are going to be short. We are going to, by going short the yen, we're going to go long the Aussie yen, long the CAD yen, long the Euro yen, long maybe the dollar yen. I'm not sure about the pound yen because the pound is really in trouble, but let's take a look. I mean, it's not really doing anything. I would actually short it. I mean, or let's keep the, I mean, you don't want to have upside down position, so you can stay away from the pound yen and go long the other yen pairs. Of course, I'll be sending you the numbers about 9:30 UK time because I need to see if the exaggerated moves are they're going to come back or not, because you don't want to make a plan based on a move like this. If you see this move that happened on Friday, I mean, if I tell you to go short here or whatever, I mean, that would, even though you're on the right side of the market, but the drawdown by getting this whipsaw is very dangerous. So it's good for us to wait close to the end of this trading day to be taking it short. So to summarize, we are going to be short the pound, we are going to be long the Canadian, we are going to be long the Mexican peso. So you can go short the dollar max, you can go short the pound max, and we are going to go short the pound CAD. We are going to go long the euro pound, and we are going to go long the yen pairs, the Aussie yen, the CAD yen, the the euro yen, and the New Zealand yen, we are already, the New Zealand yen has triggered a buy this morning. The buy signal for us in the New Zealand yen is 73.
Strategy alert.
I mean, it's beginning to, so let's see the Aussie yen, the New Zealand yen. As you see, the New Zealand yen, our buy signal was 73.95. We are now 73.98, so it's pretty close. So we can wait for an hour or so and take it. The New Zealand yen is good because it has the yen and the Aussie, the New Zealand and the Aussie, they pay interest, so it's definitely good to take them across opposite from the Aussie yen and the New Zealand yen and the CAD yen. Look at the CAD yen. It's a nice decent move, and you're coming to the next structure point, which is the 78.93. You have all in the radar screen of last week. You already have, I mean, these structure points do not change. The structure points do not change, so you can use the structure points to pinpoint any additional entry if you so choose. But as I said, I'll be waiting for another couple of hours, and then I will be repopulating these entry points, and I will send it to you. But as I have explained to you, I gave you the direction of the plan, which way we are going to be trading, and which pairs are the ones that we should be looking at. That said, there is nothing more to be said. I mean, one more thing. If you look at the calendar, as you can see, Japan is closed today, Canada is closed, the United States are closed. Tomorrow there is only the German sentiment number, and that should be a good number. Will put some support, so that will help the euro pound and the euro yen. And then after that, there isn't really anything until Friday. I mean, retail sales in the United States. I mean, the economic information in the United States are relatively good, and if it's a good number, they're expecting the Federal Reserve to raise interest rate. We have been discussing this a lot, you and I, and again, it's my own humble opinion, and I don't foresee them doing anything before the election. It would be, I mean, they're already calling the Federal Reserve now as apolitical. Donald Trump is saying that. I mean, he's an idiot, but that's what he's saying. So if the Fed does anything before the election, it's just it's not possible. So this takes November out. Then comes December and we have Christmas. So if they raise interest rate before Christmas, it would be a fantastic Christmas present to the American consumer, which again will destroy the retail sales for the Christmas season. So common sense, I mean, there is no urgency to raise, so common sense says, logic, since there is no force majeure to force them to raise, they will err on the side of reason, and they will try to discuss what they will do. I don't think that they will do anything in January, nor November, December, nor January. At least they want to give the new president, I would say, 20 days to be in position so that if they decide to raise the interest rate, at least there is a sitting president, not a lame duck as we have right now. So with the Fed out of the picture pretty much till February, whatever number that comes here, all that number going to do is increase the banter and the talking between the talking heads on TV. But for us, we can use any short-term reaction to the news to our advantage. So if the retail sales comes good and the dollar jumps up 50 pips, that's a good chance for us to sell it. Because after this, they are going to say, oh, they've been doing nothing, and the dollar will come down. So we can use these news to our advantage. And this is hopefully what we're going to be doing. So there isn't really much of any news coming up next week. And the I think the next, that's pretty much it. Okay, so as I said, I will be preparing the numbers in the next few hours, and as soon as the market settles, and I'll send it to you. You have the general idea of which pairs we're going to select, and that's about it. So anybody has any questions or anything he wants to discuss? Going once? Going twice? Okay. Gone. So I will see you next Sunday. Have a happy trading week, good trading, and I will send you the numbers, as I said, in the next few hours. Have a great week, guys. Thanks, John. Take care. Thanks, Survey. Take care, guys. I'm shutting the room down.